triple top and triple bottom pattern. So before we continue, make sure you go follow our Instagram account at WiseTrade to stay notified about a lot of big projects we have on the way. Now, if you are enjoying this video and want to support our team, hit the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. Now, moving to the next pattern, the triple top and triple bottom pattern. So price is in an uptrend before it makes 3 same highs in a row, forming the triple top pattern. The swing lows here create the neckline and support level. And when it breaks, you would take trade entries short as the reversal is now confirmed. Now going the other way. Price is in a downtrend before it makes 3 same lows, forming the triple bottom pattern. The swing highs here create the neckline and resistance level. And when it breaks, you would take trade entries long as the reversal is now confirmed. So using the triple top and triple bottom pattern is the same as the 4 variations we showed you for the double top and double bottom pattern. So we won't go through it again. Moving to the next pattern, the trend continuation pattern. A bullish trend continuation pattern has your runs and pullbacks. The swing highs are higher than the previous swing highs. The swing lows are higher than the previous swing lows. This means a bullish trend continuation pattern makes higher highs and higher lows. From a price action standpoint, it shows a continuation of bullish momentum from the buyers through making new higher highs and new higher lows, and not a sideways market. Now going the other way. A bearish trend continuation pattern has your runs and pullbacks. The swing highs are lower than the previous swing highs. The swing lows are lower than the previous swing lows. This means a bearish trend continuation pattern makes lower highs and lower lows. So from a price action standpoint, it shows a continuation of bearish momentum from the sellers through making new lower highs and new lower lows, and not a sideways market. Now moving to the next pattern. The trend change pattern. In a bullish market, there are 2 ways the trend change pattern can form. Variation 1. You have your moving uptrend through the higher highs and higher lows, before price makes a lower low, giving you your trend change pattern in a bullish market. Now variation 2. You again have your moving uptrend through higher highs and higher lows, before price makes both a lower high and a lower low, giving you your trend change pattern in a bullish market. So from a price action standpoint, it shows a loss of momentum from the buyers as price failed to make a new higher high and instead created a reversal pattern. Now going the other way. In a bearish market, there are 2 ways the trend change pattern can form. Variation 1. You have your moving downtrend through lower highs and lower lows, before price makes a higher high, giving you your trend change pattern in a bearish market. Now variation 2. So you have your moving downtrend again through lower highs and lower lows, before price makes both a higher low and a higher high, giving you your trend change pattern in a bearish market. So from a price action standpoint, it shows a loss of momentum from the sellers as price failed to make a lower low and instead created a reversal pattern showing a trend change from a downtrend to an uptrend. So moving on. The head and shoulders and inverse head and shoulders pattern. So before we continue, if you are enjoying this video and want to show your support, please hit the like button right now. So the head and shoulders pattern starts with your moving uptrend. Left shoulder, the head at the swing high, and then the right shoulder at the lower high. The swing lows here make a neckline or support level. From a price action standpoint, it shows a loss of momentum from the buyers and the start of a trend change as a lower high has already formed. Now there is a higher quality head and shoulders pattern, which is a head and shoulders pattern with a slanted neckline. It's the same as the normal head and shoulders pattern, except you already have a lower low that formed, creating the slanted neckline. From a price action standpoint, this is a higher quality reversal pattern because price already made both a lower low and lower high, which shows a fully formed trend change, not just the start of a trend change. Now going in the opposite direction. The inverse head and shoulders pattern starts with your moving downtrend. Left shoulder, the head at the swing low, and then the right shoulder at the higher low. The swing highs make a neckline or resistance level. So from a price action standpoint, it shows a loss of momentum from the sellers and the start of a trend change as a higher low has already formed. Now again, there is a higher quality inverse head and shoulders pattern, which is an inverse head and shoulders pattern with a slanted neckline. Again, it is the same as your normal inverse head and shoulders pattern, except you already have a higher high that formed, creating the slanted neckline. Now from a price action standpoint, this is a higher quality reversal pattern because price already made both a higher high and higher low, which shows a fully formed trend change, not just the start of a trend change. So this then brings us to our next question, which is, how do we use the head and shoulders pattern as part of our strategy? Again, right now, go to the comments below and let us know exactly what questions you have and topics you want us to cover next. Also, if you're enjoying this video, hit the thumbs up button to show your support.